Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP. More specifically, we are going to be addressing the global liquidity crisis that is essentially brewing right now. I think that the recent collapse of the Silicon Valley Bank was the big one to really kind of warn us of what is to come. So, one, obviously, we all know that money and liquidity is drying up. And when I say money is drying up, I mean a lot of disposable income and money to flow into these markets to make them more liquid is essentially gone. We do see here from the Kabaisi letter, which I do have two tweets here from them. The first one is this one that got posted just on the 11th, and then this one that got posted on the 9th. From the 9th, we did start to see markets kind of, switch up a little bit. For an example, liquidity is disappearing all around the board. S&P 500 lost $600 billion in 2 hours. Crypto markets down $40 billion today. Four biggest U.S. banks down $50 billion today. Bond markets trading like meme stocks. All the buyers are gone as inflation is here to stay. This comes after what appears to be a historical move into markets. U.S. bank deposits just fell for the first time since 1948. More specifically, accounts with $250,000 plus contributed to the most of this. What does this mean? Well, a massive amount of capital was put back into the markets. And we do see down here, investors were betting on a Fed pivot. Once again, US data seemed promising. However, the CPI/PPI inflation data was revised higher since then. Now, the Fed can no longer pivot as disinflation is not nearly as strong as previously reported. The data has literally changed. That brings us to today, a market with diminishing liquidity, sidelined capital that rotated back into the markets in late 2022 is trapped. With low investor confidence and diminishing liquidity, pressure is building. And then, from the 11th, this week's liquidity crisis. 1. Stock markets lost $2 trillion in 5 days. 2. Crypto markets lost $100 billion in 24 hours. 3. U.S. banks lost $100 billion in 2 days. 4. SVB failed with $200 billion in 24 hours. And 5. Bonds post biggest move in since 2008. All of the buyers are gone. So, obviously, listen, when we take a look at most of these markets, most of the money, a lot of like what banks hold in, their reserves and stuff like that, it's not really there. I think that SVB is a perfect example of this because the bank run basically happened on very low amounts compared to what they were actually holding in reserves or what they were essentially holding in reserves. Most of the banks, most of what we see within finance, a lot of it is leverage. And we all know what happens with leverage. We all know that it's a recipe for disaster. But now we are starting to see a little bit of history rhyming instead of repeating, which means when we look at what is happening currently with SVB failing, it brings up a question on, well, what's next? What happens next? Because this is not going to be completely ignored. We're going to probably see a lot more withdrawals. We're probably going to see a lot more money moving. And this is probably going to cause more bank runs. We're probably going to see a lot of big issues happening within the financial world. And it brings me to the next tweet here, which is the fact that we do have a Fed meeting. It's not I see a lot of people saying like it's an emergency meeting. It's a normal meeting. It's been on the schedule for a while. But it does bring up a question on, well, what's going to happen within this meeting? What are they going to discuss? Because it's going to come up, right? Silicon Valley Bank is going to 100% come up in question. What they need to talk about is liquidity, because liquidity is the focus point. As we look at this case, as we look at what's happening around the US, as we look at what's happening outside of the US, internal and external factors, there's one thing that is always being discussed: a coming liquidity crisis. It's brewing. We've seen it in the past, we've watched it unfold, and now we are essentially seeing the same exact red flags. How can it be solved? Well, digital assets 100% can solve this, giving Ripple, a US based company, the clarity they need to help solve this liquidity crisis. Because again, as we look back in time, we know that XRP, through on demand liquidity, can solve a lot of the inefficiencies around the current traditional financial system. We do see over here global liquidity crisis. Ripple and Stellar have been working for a long time to help make the transition and give the markets the liquidity they need to emerge from the crisis. The new financial system is upon us. XRP and XLM, I do believe that these two are great, by the way, are the guardians. And here we have XRP, on-demand liquidity. We can see this here. Obviously, you guys probably are aware of the use case advantage around XRP, solving liquidity. And then over here as well from XLM, liquidity, liquidity, liquidity. It's all about liquidity. Like this is exactly why I always talk about XRP. Like, listen, I don't talk about XRP because it's trading at 36 cents and has been for the last, however many days. I think it's been like over 100 days. It's been within the same range. I don't talk about it because of the price today. I talk about it because of liquidity. We know liquidity is extremely important. Market liquidity is drying up inside and even outside of crypto. As we focus on this, we look at the assets that can change this. And here we have down here from Stellar, to quote our 2021 roadmap, improving liquidity is an essential part of the 2021 growth plan. The ability to efficiently convert assets is what enables varied use cases and actors to interact with one another on Stellar. But also, if you zoom out from this and you look at the plans that are in place, you look at the discussions that are in place. Like here we have from R3 and Swift, head of digital currencies at R3 and the head of innovation at Swift, talking about Inside Innovation Live. R3 states that it's time to make money more fluid for cross-border payments and remove the lumps. This is pure gold. Listen closely to this video.
Right. Yeah, that makes a lot of sense. I'm conscious. I'm looking at the stream here, and there are loads of questions coming in. So I'm going to ask you one last one from me, Ricardo, and then we're going to go to the stream's questions. So quick fire one. Over the next few years, what do you think like the top 3 sort of transformational use cases for blockchain will be?
Ooh, okay. Well, it'll have to be in capital markets, payments, and identity. So, let me just give you a quick view of what that means. So in capital markets, the continued digitization of all assets and asset classes, I think is really exciting. So, the digitization of property and cars and what have you, and then the ability to trade those things in primary, secondary, and even tertiary marketplaces. I think that's going to be cool. Money, so the movement of money moving from lumpy to liquid. So, today money is very lumpy, right? You get paid every month or every couple of weeks. Why don't you get paid every second?
Right.
And we move money cross-border, but we don't send emails cross-border. Of course, governance and legislation is different on money versus data, but still, I think that certainly will see a shift of money being more fluid. And then on identity, if we consider what's happening with Web3, the promise of bring your identity to the internet and the identity is yours, sovereign identity is something that I think we still need to solve. We've been talking about it for a very long time, but hopefully now is the time to get it right.
And again, almost all of these major use cases within crypto are great, but one always comes to mind, which is also exactly why I do hold XRP. I do believe, like, listen, if you want to sit back and you want to, look at XRP and say, hey, XRP hasn't made a new all-time high since 2017, 2018, don't you think it's time to give up on it? Then hey, that's totally fine. You don't need to watch XRP content. You don't need to hold XRP. You don't need to do anything with XRP. But from a perspective on someone who has read the white papers, looked into the PDF files, understand, I understand everything that's happening around XRP. There was a PDF file. This is the PDF file. And if we scroll all the way up, this is transforming global payments, enabling the IOV, the Internet of Value. When you come down here and you scroll down to this section here, it's number 7 on this PDF file. We do see Ripple, coordinated process enables new benefits. Here's originating bank to beneficiary bank, bidirectional messaging with settlement instructions, speed, payments, settle, real time, transparency, end-to-end tracking and status of the payment, certainty, total cost and message details confirmed before initiation, lower costs, reduce failed payments and costly intervention for error resolution. Then down here, we do see the key functions, bidirectional messaging and tracking, ISO 20022 format plus expandable contextual field, real-time settlement instructions, capable of running 24/7, 365. Then down here, this part is very interesting. RippleNet, specialized for interbank payments, network of financial institutions underpinned by Interledger, connects and coordinates ledgers. Banks maintain their own ledgers, enabling scalability and data privacy. Leverages cryptography and encryption from blockchain technology. And then you could see down here, so here's case studies. I don't want to look at the case studies. I want to go down to this area. So the past, reached through pre-funded relationships. And you can see a lot of the issues here, opportunity cost, trapped capital. You also see, payment reach limited to high volume corridors, ongoing compliance overhead, costs open and maintain accounts. Here's the future. So you have digital asset parked at the center point, which again goes back to what Digital Assets Daily is talking about here, talking about a liquidity crisis. Digital assets solve this. Digital assets are very, very efficient. They are very liquid as well. And when you park them at the center point, and it has the opportunity to be, we'll say XRP, right? On-demand liquidity, it's the biggest use case. There's just no argument against it. I really, I've seen a lot of people talking about, this is a bigger use case, that's a bigger use case. I would say the only one that's on par with it is interoperability between the traditional system and the digital system, aka QNT, right? QNT is definitely up there. But having an asset that could be at the center point that is creating liquidity between any currency pairs. Over here, we do see creates a liquidity between hard to reach currency pairs, but also enabling fast, low cost payments, eliminating the need to pre-fund in destination countries, and also connecting fiat currencies more efficiently. Having all of that tied to one is a game changer, right? And all of this is solving liquidity. Liquidity is the focus because, again, if you solve for liquidity, you solve for almost every inefficiency around the traditional system. Today, more than ever, I do think that everyone should be focused on this because it's a huge issue. It's an issue that doesn't cost the wealthy individuals either, right? It costs smaller individuals, business owners, individuals that own a company that's not generating, hundreds of millions of dollars a year. Individuals get hurt every single time that a bank collapses. Silicon Valley Bank hurt mainly small business owners, the retail sector. I mean, sure, there was large corporations tied into it as well. But for the most part, this needs to be an area of interest. No matter the size of your bank account, no matter, who you are, what you do, liquidity is always going to be a focus point. And it needs to be solved. And we do see use case, bridging fiats to solve for liquidity. Financial institutions exchange fiat for XRP. Via a local exchange, financial institution does not have to hold XRP. XRP transferred between digital asset exchanges. XRP exchanged for the local fiat, distributed directly to the financial institution's account or dispersed over local rail. And here's an example of that payment flow. You can see it all. And you can see the total transaction time is basically around 2 minutes. And then if we scroll down here, we could see a few things on how they are preparing this. You could see, the idea and the plan behind it all. But mainly, a lot of this is talking about atomic settlement between two central banks, which they do talk about here, and how they want to create regional networks. All of this is centered still around liquidity. we do see central banks can offer liquidity when constrained via commercial banks. Smaller banks can leverage central bank reserves to conduct cross-border transactions. All legs are atomic for certainty of settlement 24/7 in real time for all use cases. Interoperability via interledger protocol can connect existing networks as well. And then last but not least, we have atomic settlements via central banks. Real-time 24/7 payments with local currency settlement via central banks. This will allow money to move freely. This will solve for liquidity. This will ultimately make the extremely inefficient traditional system efficient. This will change the way money is moved. This will change the way money is transacted. This is a huge use case. And we do see over here from Matthew Lin Y. Liquidity in days or seconds. Crypto is here to revolutionize. Again, it's not just XRP, but I do think that XRP is one of the biggest use cases within the space. XLM as well is on the same level for the retail sector. I think these are two assets that could ultimately change everything, the same way that we've seen over here with Ripple, or XRP, I should say, and XLM. But in this, we do see Stella, a joint research project of the European Central Bank and the Bank of Japan, payment systems, liquidity saving mechanisms in a distributed ledger environment. Then over here, liquidity management in a multi-currency corridor network. Deutsche Bank, global transaction banking, preparing for real-time liquidity, the need for collaboration around the future of liquidity and collateral management. And then last but not least, can DLT, commonly known as blockchain technology, help financial institutions optimize the liquidity of their Nostro accounts and reduce the significant operational cost associated with reconciliation? This was the central question in mind when SWIFT, together with 33 leading global transaction banks, kicked off a proof of concept POC to use DLT to provide real-time visibility on Nostro accounts, forming a key part of the SWIFT's GPI strategic roadmap. The initiative began in January 2017 and is due to conclude at the end of the year. All of this is centered on liquidity. And remember, right? Last but not least, this is the last part of this video. From RizXRP, he posted this video. It's the benefits of the Liquidity Hub that Ripple is building. It is supposed to be launching. I don't know if it's fully live yet. I know that it was supposed to be launched in 2022. I don't know if this is fully live yet. But the Liquidity Hub is crucial. In fact, I think that it's one of Ripple's best offerings. And does it have exposure to XRP? In my opinion, yeah, I do think it does. But it also has exposure to most of the market. You can utilize Bitcoin, Ethereum, etc. This is incredible. Listen closely to this video.
Crypto is here. It's no longer an idea or on the horizon. It's already the reality of how businesses and people trade, move, and manage value. But despite a growing desire by businesses to engage in crypto, integrating digital asset solutions is complex. It often requires cumbersome integrations, has high costs, and involves engaging with fragmented, slow, and costly fiat payout landscape. At Ripple, we built Liquidity Hub to seamlessly bridge the new world of digital assets with the traditional world of fiat. The experience is plug and play, encompassing a single API connection into a breadth of liquidity pools. It offers optimized pricing via smart order routing. And through Ripple's suite of products, best-in-class last-mile fiat payouts into global jurisdictions will be available. Liquidity Hub powers interoperability between crypto and fiat systems, bridging digital assets seamlessly. Partner with Ripple for your crypto liquidity needs today.
And again, this is the evolution in front of us. Everything that we know will be changed forever. Blockchain, crypto technology, I mean, this is truly one of the biggest focus points. I always say that, we will see the need for liquidity when things start to break. I've been talking about it for a while on this channel, the coming, great reset, if you will. But ultimately, the great reset is on par with the collapse of the traditional system. See, the way that I look at this is we will see a 2008-like event. And I think that's brewing. I think that this liquidity crisis is starting to spiral. I think that we're starting to see the beginning stage of this. And in my opinion, the collapse, once the dust settles, is when the new system will rise. And that new system will be centered on digital assets. It will be centered on these networks and these use cases that can allow and will allow for significant efficiencies to be really shined on. And liquidity, solving for liquidity, is the key aspect to it all. And remember that we are already seeing major engagement already around this. And Ripple is playing a vital role in it all. Bank of England, Accelerator Program, Federal Reserve, Faster Payments, International Monetary Fund, Saudi Arabian Monetary Authority. Ripple is working within all of these. Ripple selected to inform the next generation of RTGS payment infrastructure. Ripple was selected to serve on the steering committee of this industry strategic initiative. Infrastructure Innovation Partnership for financial institutions to leverage Ripple for cross-border payments. Ripple was selected to serve on the IMF's high-level advisory group on fintech. We're seeing this. We're seeing everything come to life before our eyes. It's only a matter of time. And again, I always say that unlocking that liquidity, unlocking Nostro and Vostro accounts, which Ripple has mainly focused on for a while, it's going to free up so much working capital. And on-demand liquidity as a service is a game changer. So yes, I do believe that the brewing liquidity crisis that we are essentially starting to see morph into reality can be solved by digital assets like XRP. And companies like Ripple that are sourcing these digital assets to solve for liquidity, they are going to become guardians around the new financial system. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. Others, up to you all. Have a beautiful day, beautiful night, wherever you guys are on this. Before this, been Nick. Peace out, guys.